Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, March 31st, 2011. This morning I'm talking about the Celtic paper tiger, and by that I'm talking about Ireland. Today, a little bit later today, they're due to report the bank stress tests over there, which are bound to have an effect on how the euro performs here for the rest of the day. As you can see here from the chart, we're looking at a 30-minute chart of the euro. All right, the euro had a tremendous move yesterday higher as risk appetite was in full effect. Now this morning, despite these news we're going to get out of Ireland a little bit later, okay, they had CPI data that came in for the Eurozone, which came in a little bit hotter than expected. Okay, so it looks like they're looking at inflation right here. Producer prices in France were a little bit higher. In Germany, let's see, the producer prices were also higher. Okay, CPI estimate came in at 2.6% versus an expectation of 2.4%. Okay, and in Italy, they also had higher consumer prices. German retail sales were actually a bit lower, which sort of counterbalances that move. All right, but the unemployment change, there were less people unemployed in Germany last month, so that brought the unemployment rate down to 7.1%, which is recent highs. So as you can see, the euro had a huge move higher yesterday, and now we're up over 142, although it looks like it's struggling to hang on here. All right, so we've got some other news happening. I just want to show you the Kiwi real quick. Okay, you can see the Kiwi sold off initially overnight, but it looks like it's bounced back on some risk appetite. All right, they had their business confidence figures came in much worse than expected. Negative number of 8.7%. Last month's reading was 34.5%, and that's to be expected after the the earthquake that they had seen there. All right, we've also got the Aussie dollar trading a little bit higher. All right, this right here, 103.60. That little spike looks like that's a new all-time high. Aussie keeps making all-time highs as it goes on. Now, they had retail sales figures that came in better than expected, 0.5% versus 0.4%, but their building approvals were off. All right, they were expecting a gain of 4%, and they got a decline of 7.4%, which put the year-over-year number down to a negative 21.8%. So that's holding back the Aussie just a little bit there. I want to look at dollar CAD real quick. Okay, it looks like dollar's been strengthening against the loonie. This looks like it's getting close to an all-time high down here. We've got Canadian GDP figures coming out later this morning. We're going to have to see how that comes in. But the monthly expectation is for a gain of 0.5% like last time. We'll see how that goes and if that one goes through. We've also got dollars pulling back a little bit from the yen, but you can see here it's been up around 83.2, which falls in line with what they've been hoping for with the G7 intervention that happened in Japan. All right, now we've got U.S. Initial jobless claims out a little bit later this morning. All right, we're expecting 380,000 job losses. We'll see how that comes in. As long as we stay in that 3 handle, people are going to say, all right, it's improving a little bit, but we really need to start to see some market improvement from there. So who's missing from the equation? We're missing the pound here. All right, pound had a nice move overnight, but it looks like it's been selling off here. Let's see what's happening with the pound. There's concerns about the interest rate rise here. Now, euro pound, that's something we should take a look at. Let's look here, euro versus pound. Okay, boom, you can see euro going much higher than the pound right now. As the expectation is that the ECB is going to raise interest rates a lot sooner than they will in Great Britain. But you have to realize that the ECB is they're sort of in a catch-22 right now because they're starting to see inflation. It's not enough at this point to break everybody's back, but I mean everybody's already pretty downtrodden. But now you have these countries that have this enormous debt. So we've got Ireland. They're going to report the health of the banking system today. Basically, it looks like the government's going to end up owning all of the banks in Ireland. Now you also have Portugal and Spain, who are teeter-tottering on at the point of having to accept a bailout or not. And if rates start going up and we get into this tightening cycle, all right, that's going to push even higher rates on these banks and make it harder for them to refinance their debt, which then potentially pushes them closer to having to having to seek a bailout. So that's the problem going on with the euro. But right now we'll just go back and look at Euro USD. It's still hanging in there above 142. So that just shows you that despite all the problems in the eurozone, people still like it better than the dollar. And it's because of QE2, weak dollar policy that's happening. But I wouldn't be surprised to see the euro breach 142 and pull back here by the end of the day. So that's what we're looking at for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.